Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report with Alpari. So in the next 30 minutes I will tell you what's going on the markets from the technical and fundamental point of view. First we'll start with fundamentals. Let me show you the calendar. And we are all waiting for CPI data from US. Which will be released in half an hour. That will be the most influential number. Maybe even this week, right? Because the calendar this week was rather empty. We had important events for other currencies, but for dollar, I guess that CPI will be the most important data this week. Apart, as you can see, CPI expected 1.7, 1.8, so CPI is expected to go up 0.2%. As you can see, the previous number 1.6. Now we are expecting 1.8, and we will watch the decision live in 29 minutes. Apart from that, we'll have two speeches. We will have the Fed speak from two Fed members, from two FOMC members, Kaplan and Kashkari. And that will be it. But the main story is not taken from the calendar, as you know, because the main story for the markets right now are tensions on the Korean peninsula with North Korea. So after we have two new significant informations here after fire and fury comments from Donald Trump. New information is that Donald Trump tweeted today that military options are locked and loaded, and they are just getting ready for eventual eventual action, because that will be a reaction, eventual action from the Korean government, from Kim Jong-un, right? That's the first information, and the second information is from China, right? Chinese government said that they will prevent any change in the regime, in the government in Korea. That's a pretty strong declaration, that they will prevent regime change in Korea. That is why stocks are going lower. Safe haven assets are going higher, climbing higher, like gold, Swiss franc, Japanese yen. American dollar, usually considered as a safe haven asset, is on the other hand is weaker today. Was a bit weaker yesterday. So here in American dollar, in trading of the American dollar, it's more about the CPI data than the risk off mode that is seen on the other instruments. So if so, we should expect some nice movements today. We should expect some nice movements in the next 25 minutes, if the market is ignoring the geopolitical tensions. They are waiting for CPI, so we should get some increased volatility during the publication of this number. Now, as it's as always on Friday, actually, let me show you the calendar for the next week, because we would like to know what is going to happen next week, right? We want to be prepared, as we always do on Friday. We try to check what's the calendar. As you can see, on Monday we start with meeting minutes from Reserve Bank of Australia. On Tuesday, many European countries have bank holidays. In UK, CPI, retail sales in US, important data. So even despite the fact that we're having bank holidays in many countries in Europe, it will be an important day for the markets. On Wednesday, GDP in Eurozone and FOMC minutes. On Thursday, data from the job market from Australia, CPI from Eurozone, and ECB monetary policy meeting accounts. And on Friday actually, no significant data. So we can see that it will be quite busy week. Not the busiest week we saw in the history, but definitely we'll have more information than this week, and obviously adding to that tensions over North Korea, we should get some nice movements on the market. That's it from the fundamental point of view. Let me now show you the technical analysis. We can start with cable, because cable is defending nicely this horizontal support here, which is in the same time 23.6 Fibonacci line. What is worth noticing, well, that's a descending triangle, and usually descending triangle ends with a breakout of the support. But in the same time, we have 3 tests of the support, and all of them finished with long tails and with nice upswings. So in my opinion, that's a trade which is worth risking. So long position here, because the potential stop loss here is very tight. It's 20 pips for a cable. It's really low, and a potential profit, well, first target is here. So even here, guys, you have 50 pips profit and 25, let's say 25 pips stop loss, so 2 to 1. Always when you have a position with 2 to 1 risk to reward ratio, where potential profit is twice as big as the potential loss, it is worth, it is worth thinking about opening such a position. American dollar to Canadian dollar just stopped on 23.6 Fibonacci, and well, here is the main resistance, in my opinion, 38.2. But this also can't do good. For me, there is no clear signal from the technical point of view, so I won't even try to estimate the direction here. So far, well, we do not have sell signal because the price is still in the flag, so the price can continue higher. But sell signal will be activated once the price will break the lower line of the flag. As long as we are in the flag, there is a kind of a positive sentiment here. American dollar to Swiss franc, we can see this risk off mode with the Swiss franc for the last 3 days exactly. But the main trading signal, which is a bullish engulfing from the first half of June, it's still present here and it's still active. American dollar to Australian dollar to American dollar, and look, that's what we were talking about yesterday. We said that bounce, well, first of all, a wedge or a flag, it doesn't really matter. Here is a flag. If we go higher, it would be wedge. Wedge is or a flag is a trend continuation pattern, so we should get a trend continuation, so a downswing. Also, the price stopped on a horizontal resistance here, pretty significant, and also on a downtrend line, upper line of this correction. As long as the price stayed below this arrow, which we put here yesterday, the sentiment was negative, and actually the price bounced off this upper line of this formation and went significantly lower. Okay, first stop for this movement, naturally 23.6, also tops from 14th and 17th of July. The next potential target is this blue line. Maybe you didn't see this as a potential support, but now it's clear for you why this blue line can be a significant support. But sentiment definitely still positive on Australian dollar to American dollar. Now Mexican peso, American dollar to Mexican peso, which is fighting for this breakout of this trend line. But again, what I was telling you, that it's not actually a breakout. It does not look like a breakout. Price just moved sideways, and it happened that there was a trend line there, but we cannot actually call that a breakout, because a breakout is strong. A breakout should be done with a Marubozu candlestick or something. It's not even a false breakout, because there was no breakout whatsoever. The price just moved sideways through the trend line. So, well, maybe that wasn't any resistance at all. But in my opinion, a few significant tops were connected here, so that should be a resistance. But as we can see, there was not, because the price just moved sideways there, actually creating here kind of a channel up formation. Not to confuse. Alright, looks a bit better. Maybe here. Not to have too many lines though, because it makes no point if you make it too complicated. So on American dollar to Mexican peso, no trading signal. Euro dollar. That's a good one. Why it's a good one? Well, first of all, let me show you the daily chart. Hammer. Two hammers in a row, even if they are not present on a support, should be significant for you. But two hammers in a row, when they are present on a support, that should be definitely a game changer, and I think that you should pay attention to. What was that support? That was a long-term uptrend line, which is with us from the end of June. So mid-term, long-term. Depends from your time frame. For me, it's mid-term. But I'm fully aware of the fact that most of the traders are short-term traders, so for them it will be hell of a lot of time, right, since the end of June. So, my friends, we have two hammers on a daily chart bouncing over an uptrend line. That's a pretty strong buy signal, but that's not it. We also do have this yellow area. Why this yellow area is so wide? Because the upper line is the top from 2015 and the lower line is the top from 2016. So that was the wide area here, 100 pips area where we could get a potential supports and resistances. and they were all respected. As you can see here, support, support, after the breakout, support, 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 support. So those tops from 2015, actually to be precise, these are not the highest levels in 2015, right? Because we started with the highest levels. But okay, that was the top for the rest 11 months. But some traders may argue that these were not tops from 2015, and yes, fair enough, they were not. But anyway, what we're having here is a bounce from a trend line, a bounce from those tops, which were a local support, and also a breakout of the upper line of the wedge formation. And here we have a wedge. Wedge is a trend continuation pattern. Trend before the wedge was bullish, so we broke the upper line, and we highlighted this checkpoint yesterday. That breakout of this line should trigger buy signal. So 14 minutes ahead of the CPI data, we do have actually a strong buy signal on euro dollar. Obviously, CPI should strongly influence the price here, but so far it looks bullish. Next instrument where we do have a bullish situation in euro is euro to Australian dollar. Also an uptrend, also a wedge. Those black lines are a wedge. And you know that recently we got a short-term sideways trend. And this kind of a sideways trend below a resistance this kind of a sideways trend below a resistance, it's usually a sign for a breakout. It's usually a sign that traders are waiting for a breakout. They are maintaining the control over the market, and they're just waiting for appropriate sign, for a trigger, for a spark to start the breakout, right? This breakout is later fueled, is later additionally driven by the stop loss orders. So there's a higher momentum when the stop loss orders are triggered. But initially, before it happens, we do have a consolidation below the resistance. And that's very often a sign that we should have a breakout, especially if you will see the previous bounces from the support or a resistance. You will see that there's a different stalemate, right? So when there was a bounce, it was usually a contact, one contact. I'm not talking exactly about this situation, but in overall, that there's a bounce with one contact, one touch, and a reversal. And then you see a combination of few attacks in a short time with small bounces. You can see it should turn you light in your head that the breakout is very, very possible. Dollar index, as you can see, dollar for the past 2 days is a bit weaker. We broke this local support, and now we're using it as a local resistance. There's no clear signal yet, as it was, for example, here or here. So we just have to wait for the CPI to show us a direction here. And gold. That is absolutely a good one on gold, as you can see. Upswing, flag, upswing. Yesterday we broke this red line. Is this red line important? Well, in my opinion, yes, it is. It is a line which is connecting recent lower highs. It is very significant, and the price broke it. And this breakout opens a way to levels slightly below the psychological barrier on $1,300 per ounce. It's $1,295 per ounce, more or less. and breakout of this red line opens a way to test this resistance here. Currently I do not see other option. Gold can be influenced by the American dollar. Can, but does not have to, because we can see that gold is recently resistant to impulse from American dollar, at least for the last 3-4 days, when we do have this risk-off mode on the markets. Silver also in a very good shape. After the breakout of this horizontal resistance on 16.8, very strong one, very significant. After breakout, first we broke this downtrend line, then a horizontal resistance, and now the closest aim is this downtrend line here. We have not so much there. I think that we should get there quite soon. If not, maybe not today, but the next week. The next price getting there in the next week looks very probable. British pound to Japanese yen. Actually, sell signal is triggered right now. They had a great chances for an upswing because the prices was in a ascending triangle formation, but failed to attack the resistance. And went significantly lower, broke the horizontal support here, broke the uptrend line. So definitely there is no buy signal here whatsoever. And there is a midterm sell signal on British pound to Japanese yen. Euro to Japanese yen is also is going lower. After the breakout of an uptrend line, we also broke a horizontal support here, which is a negative sign, and now currently this level will be tested as the closest resistance. As you can see, broken support becomes a resistance, and the possibility of a bounce here is really high. We'll see on our daily analytical report on Tuesday how they finished here. In 7 minutes we will have CPI data. New Zealand dollar to Japanese yen. I will remind you this. Here I bought, here I stop loss. If I didn't have stop loss, I would be screwed. I would be so screwed. But I always have stop loss not to be screwed. And you should always have stop loss as well, because sometimes you can pick the other side of the market. American dollar to Japanese yen. We told you that breakout of this support will trigger a sell signal, and there is a sell signal right now on the market. No, I think that's enough for a comment. American dollar to Polish zloty, still in a channel down formation. Almost we went to this local support, which is pretty significant. We almost went there. Well, this level we touched, right? But I was thinking that we're gonna aim this support. But we are still in a channel down formation, and as long as we are in a channel down formation, especially that we're below an important resistance here, as long as we stay in this channel down formation, the sentiment is negative. Now, before the CPI data, I hope I will show you oil and indexes. I should manage to do that. So oil, that's why that is perfect example. You can check on our previous daily analytical reports, because we got a breakout from this pennant, right, which was bullish. But I told you that I'm not convinced with that, and I would rather see a breakout of the 61.8 and those previous highs. So that's why I put a thumb up here. And it was live, right? It wasn't like I put that after the webinar, but I put that live. That breakout of this horizontal resistance should trigger a buy signal, not the upper line of the pennant. For me, it was not so significant. and actually price tested that and went lower. If you open the buy position here, you ended up on loss. So now the price bounced from this level, broke the upper line of the pennant, this time from the top, broke the lower line of the pennant from the top, broke the horizontal support from the top, and now we are having a sell signal and we are testing the recent support as a closest resistance, right? Broken support becomes resistance, so there are high chances that we will have a bounce here. DAX. With the SEX, we highlighted a place, we marked a place where the sell signal will be triggered, and there was a sell signal triggered. So price broke this horizontal support here, went significantly lower yesterday. Now we're having a small bounce, but it's not so significant. There is a sell signal according to our view, but you shouldn't be surprised about that. And S&P 500, look, from heaven to hell after setting all-time highs here intraday. We broke this support and finally a very important support. So a horizontal area of $2,452 points, but in the same time it's a long-term uptrend line here. It's a lower line of the channel up formation, right? Where are the next resistances or supports? Well, the most important one is this gray one, but first we need to break this one. But I do think that this gray one will be important, especially if we use those lows. We can retrace, let's say, somewhere here. Okay, 2.5 minutes to the data. Let's watch the data live. On few instruments. Oh, this is actually my live account, and we will have a live trading in the next half an hour. Why not? We can do it here on those. So actually, you can see that on my account with this open to orders, we are on profit right now. And I took this trade on British pound to American dollar, and you can see that the risk here is really low. 160 euros. I could have opened like 6 times bigger position than this one. And on euro dollar, I'm also having a position here, long position with a stop loss here on $700, slightly more. Oh no, actually with the current account, well, slightly more than 1%. So here, from those positions, it would be better for my trades that CPI would be worse than expected, right? But it's always a lottery. You have to take that easy. If the potential loss is small, you should be emotionally free from that. That was just risk worth taking, and now we will see the reaction on that. 10 seconds. We can see some choppy movements. Before the data, American dollar is a bit weaker. Data, yes, CPI probably was weaker. Euro dollar is climbing higher. Cable is climbing higher. That is a significant profit for me. I'm really happy. So you have to protect yourself from potential losses. So actually I'm gonna put my stop loss order from the original value below today's lows, because if they're gonna retrace all that movement, it will be gone, and definitely they will break that. Now here I could go on a break-even point because my potential profit is much bigger than a potential loss, and always when a profit is as the same as loss, I go on a break-even point. So I'm gonna do that right now. So here I can lose 160 euros, but I'm gonna place it here to gain 20 euros. That's break-even point. So you can see I removed risk from one of the trades, and here I can just risk on euro dollar 160 euros. So we can see that probably a few stop loss orders and got activated. Gold is probably climbing higher like a mad. Yes. So nice, especially that we also recorded a trading sniper video before, and we were talking about exactly those movements. So another good one for Alpari team. Now I will thank you for your attention, and hopefully see you in 30 minutes on our live trading webinar. Thanks very much, guys, and if you want more information about trading, about occasions on the market, follow us on our Twitter account and our website alpari.news.